Right, guys, we appear to be alive. Great. Welcome, whoever's here. And without further ado, let's get going. Right. Let's move this over. Right. Welcome, everyone. We had a little bit of a delay, then everything getting kicked off. But welcome. Let's get this show on the road, and I'm a little bit late to the screen, but there we go. Let's get this.
You're an entrepreneur, small business owner, or freelancer.
Right, okay, sorry, I'm pressing videos that it shouldn't be. So here we go. Everyone see my screen okay? See the mouse running around? Yeah? Okay, right, okay. So what I want to do today, we want to look at where we started off this morning with the FTSE out of the trap, looking for a gap close, and that's interesting. I believe I have the wrong cash pivots on the FTSE, I think. Let's just have a quick look. Right, so as you can see here, we've got all these different pivots in the market, and we were going for a gap close this morning. We've got a contract, we've got two trades in here, one of them a swing trade, one of them going for the gap, which I believe was here. That's must have been, that was yesterday's gap close, which hit quite nicely. So what I'm going to have to do, these gaps, get the I have a tool for identifying all the gaps, and we'll quickly have a little look to make sure what I've got is correct. Let's have a quick look. There's the gaps for the day. Right, so closing gap is 81.80. Right, yeah, so these are yesterday's. So let me just get this up quickly. I'll just set the pivots. It will only take a couple of minutes. This is what I do every morning, but for some reason, I forgot to save the screen. You would have thought after 20 odd years of doing this, I wouldn't make these mistakes, but we're talking about this this morning, that you never stop learning. Right, I'm going to put this to one side so I can read it on a different screen so it doesn't keep flicking off. And we've got the high of yesterday's high of 82.52. For people who don't use these, understand these isn't, it's like absolutely flying blind if you do not understand where the real pivots in the market are and exploit them. Because if you, especially on cash markets, anything that's a cash market, which obviously doesn't include FX, but if you do not know where the pivot is, you're flying blind. All the cash pivots, because all the professional traders, institutions, etc., all trade the pivots, understand where the pivots are. So here we go. Right. So here we go. This is, now we'll do what we should do, is save. So now we've got the cash pivot saved. We did put a trade in the room this morning. Where did I put the trade this morning? Yes. So I'll just put just to remind people where we were. This was the these are the trade ideas I did this morning, and we were looking at right. We're looking at gold. Well, quickly recap from yesterday. These are the results we had yesterday. We made 8.83% yesterday. These were all the trades, and as always, I put the ideas in before we go and do the trading, which is what do we, there we are. We start off in the morning with a blank sheet of paper saying this is what we're going to go for, then put all the ideas in, as well as all the live trading, update as we go along, keep updating as we go along. These are options that we did and made quite a good killing on it, and then that was the result at the end of the day, 8.83. I haven't put the trading plan today if you don't trade out the trap live, so I'll let on Tuesdays and Thursdays, I'll let my trading group practice what we teach, so they can actively learn on a market. But I couldn't help myself this morning. We had a trade in here. I'll just make that a bit larger so maybe people can see. Trade from yesterday, still running on gold, and then another trade idea up here on a break of gold going up to this top target, and we'll have a review on gold as well to see where we are. Then we had USD Japani this morning. That was just was at 7:30 this morning, giving people an idea where I think the market could go with the USD Japani reversal down to the 38% Fibon, and a bit of detail on the rationale on the breaks, what we're trying to achieve there, and then a nice clean market, which of course was, you'd be surprised to see, it's a 15-minute bar. And I have no idea how they're doing at the moment, so we might be stopped out, we might not be. Call options this morning, called the calls this morning, a couple of hours ago on what to do, and we've got and did a video on how to set up the 130 calls, so those should be done. FTSE swing trade getting in here this morning, which is here at the 81.48. Like I keep mentioning to the guys in my trade room, it's never too late to get into a good trade, so long as you can trade on a 1-to-1 risk reward, and you still can. And we'll have a look at that for people in the room that have not traded that. And we're up again this morning, but let's get that out of the way, just a recap on there. So where we are this morning, let's zoom right out so you can see where we are. The market at the moment is on the daily, is trading on the daily view, is certainly trading long, but we have a series of lower highs coming into play and higher lows on the daily. As a day trader, we don't really use the daily as a big indication of what we're going to do down in the hour, 15-minute, 5-minute scenario. It's too much of a wide view. We look at the 4-hour. So what I was looking at this morning was the market was really coming down towards Camarilla breakout short. This is an absolute key pivot area. What you normally find is when the market touches a cam level, Camarilla breakout short, you get an ATR bounce. And I didn't look at that this morning. The ATR that we're looking for today is 9.8 on the FTSE. You can round that to 10. So what you'd be looking for a cam trade, which you didn't do live, I'm not sure if anyone in my room did do this, is what you would do is you would set your chart down into a 5-minute, and what you're looking for is the market to attack the cam level. And what you do, you buy in at the cam level with a 10-pip stop, which would have been here, and a 10-pip target, which would have been here. And that's what we call we call that a cam trade, and it's a system trade we do all the time. Very easy 1%. Took 40 minutes. So I didn't do that because I wasn't trading live with the guys. What I was looking for today was, we've come all the way down here. I did mention we did a Fibonacci lesson yesterday on how to use Fibonacci expansion, how to use Fibonacci retraces. Quite interesting. It looks like we might have put a bottom in there. So just a recap. I'm not sure who's actually in the room. I can't really see who's in the room. I don't think. No, I can't. Probably me not looking at the right things. But if we do an expansion on this, it can give us a bit of a projection of where the market actually might go. So you can see here we've got 61.8 Fibon right on Camarilla breakout long. That is the positive breakaway cam level. Absolutely vitally important. Everyone understands what the cam levels are. All the pro traders use them. 61.8%, right above the cam. So the cam is obviously a target that we should be going for. And then 100% retrace. In other words, this impulsive move up here, this phase up here, has then come down. It looks like it has formed a higher low. And what we're looking for is this impulsive move to run back up to 61.8 Fibor. So what we're looking for here is well over a 2% trade. But we've also got a gap to close as well. So there was two things we were looking at this morning. Each one was worth a couple of percent each in the marketplace. So if we zoom right down, you can see here into the one hour we had that impulsive move off CBOS, which we do expect. Drop into the 15-minute. Now, what are we looking for here? This is my one-to-one risk-reward fib tool. So for this particular trade at the bottom, we're looking for a entry in 81.50, and that's the 1% risk reward. So we've already backed 1% risk reward. That is a 2%, 2-to-1 risk reward, and we're looking to close the gap. And that is the cash gap from yesterday. This is a magnet in the market, if you don't know, on cash markets. When there is a gap, the market makers like to fill those gaps. So what I mean by a gap is when the market closed yesterday, the market at 4 o'clock took all the orders to close, all the orders to buy, etc., balanced them up, and then declared a cash close. So this close is where the cash market finished trading. All this area under here is where the market between now and, between the market closing last night and the pre-cash here is areas in the market that have not been traded. So there's no cash transactions that's happened on the FTSE effectively, and we've got pre-cash market open at 7 o'clock, and then the open at 8 o'clock down here, which you can see that spike down. A nice CBOS trade would have been perfect, and of course worked if you took it. I personally am not going to claim I took it because I didn't take it. I was looking at a larger picture because we were on a 4-hour pullback. I was looking for a trade to come back in on a just below the 61.8 Fibor, which was camera breakout long, which seemed a fairly reasonable target to go for on a bit of a swing. Might happen today, might happen tomorrow. But what I was keen on is closing this gap, and the gap trade. What is a gap trade? The gap trade, I haven't worked out the rupees on that yet. The gap trade is a 2.1% return. So that should be quite nice if we get that. I think on this as well, now we're well over 1%. For the guys in the trading room, that you move your stop up to the 1% level, 15.15. Now we're absolutely guaranteed 1%. If we lose, we win 1%. If we win, we win 2.1. So those are the kind of situations we like to get ourselves into. And it's all about managing. If you can manage your risk, then the trades should flow through after that. So we're looking for this market to close. Now, if you are new to this room or new to me on these live streams, you do know we use 15-minute bars, and there's lots of videos on 15-minute bars and frackers as well. Now, you can quite clearly see here, if I can just take this off, well, it looks like a kid's colouring book just at the moment. I will just take these frackers off a minute. We'll hide the frackers so it's nice and clean. So you can see quite clearly here we've got a 15-minute bar closing above the 9 EMA. Now, we have a lot of 15-minute bar traders in the room, and to get into the 15-minute bar correctly is a little bit more information rather than the video that I provided. Because you're on the live stream, I have a little bit more information. What we're looking for, would be looking for here on this 15-minute bar is a break of half the spread on the 15-minute bar here, stop under the swing low here, and you'd be looking for a 1-to-1 risk reward on that 15-minute bar, which just takes you round about the close area. So that's a 15-minute bar, and you can see, you know, we traded support resistance trades here, and effectively this particular trade, for the people in the room will know what there is. It's walking the dog, as we call it. We walk the dog. Walking the dog means when we are on a 15-minute chart and we see some flat tops, in other words, the market on the Heikin-Ashi bars, and we only trade Heikin-Ashi bars, by the way, in the room. When we see a flat top, in other words, if the market's immediately accepted that's a top price on a bearish candle, it comes down, and these often, like buses, they all come in 2s or 3s. Very rare do they come in 1. The only time that you see a 1 is around economic news and market opens. So what we do, walking the dog, for people who are not used to that term, is we see a flat top here. And what we do, we know the market's coming down to a really key area, Camarilla breakout short, and a 4-hour resistance level. So what we do is we get our entry, mark this as an entry. So we'll take that as an entry position. We'll put a 30% ATR stop on this. And what we'll do every time a candle forms, we'll put a buy in here. Then we'll walk it down for a buy in here. Then we'll walk it down again for a buy in here. And then we walk it down for a buy in here. And as you can see, we walked the dog all the way down to here, and the market went boom, and we got triggered in straight away on that trade, on the swing trade. And the swing trade here had to be under this pink line here. So this pink line here, and it's called a C gap. That is a gap in the market that has not been closed and will act at some point in the future as a magnet to draw the trade down to that gap. So what the not the worry beads, but the issue that we had here was that if the market runs up, this could be just a phase leg. And what I mean by a phase leg, markets only ever go up or go down. That's all they ever do. And we call those waves or phase, and they're moving waves and phases. So there's a wave 1, phase 1, or a wave 2, pull back, and another wave 1, phase wave. The issue that I've got here is, have we got a cam bounce? Is this just a cam bounce? And will it then come down and close this gap? Now, if the gap gets closed, we'll get a lot of buyers coming in on the gap trades. For people who understand closing gaps, which is probably not most of the retail traders, but those guys that are professional traders know exactly what I'm talking about. These are magnets in the market. There's another one there from April of 26 that never got closed. The counter to that is we've got a closing gap from yesterday here. So what might happen here is the market will have a little wiggle up, a rush up to here. I'll just take these color painting by numbers off again. What can easily happen here is the market could run up to the close, and people are going to trade the close. In other words, take profit out at the close. So what we're aiming to do is to close this gap for 2.1%. We have a 15, we've locked in 1% here already. What we could do, we could walk this up, and we can show you, we'll run a technique in here as we get up to these key levels for monitoring the market and make sure we get the maximum we can out of this. So on this top trade here, we're 27 pips up. We want to get 30 pips, which is a full 2%, which would be very nice if we can get that. We'll just go on a 1 minute chart. So when we get to a key area, it's marked here with a 9 EMA. I'm going to do a video on this. I think people have said they're interested in the EMA, 9 EMA. I've talked about how you extend profits, and we've got videos about extending profits on the 9 EMA, and we're going to use that technique here now. But I'm going to do a video on, absolutely, you must be insane not to trade if you trade against the 9 EMA. This is some previous levels that we've got in here. I'll take those off. Absolutely insane if you trade against the 9 EMA, and I'll do a video explaining why the 9 EMA is so important to traders and why you should be using it. I know people use 8s and 20s because they're the Fibonacci numbers, but the 9 EMA, not simple moving averages, is really the golden number. Does the gap close happen every day? Probably 8 times out of 10 it will happen. It will happen, yes, and it usually happens within 3 days. If it doesn't happen in 3 days, then the market's probably going to walk away from it due to economic news and due to economic news. But the gap trading is very lucrative, and it can be over and done with. Sometimes we're in the market, we open up at 8 o'clock, boom, 5 minutes, and we've made our money for the day. We've got done the gap close. So just to explain this a bit further, this is the 9 EMA. You see these Fibonacci candles, and what we're looking for, don't use normal candles. It's got to be Fibonacci the way they work. So what we're looking for here, we're looking for this market to rattle up to our target, which is 32 pips. To be honest with you, a 1 to 2 would be great. We could come out at 30 here. And what we can do, I'll tell you what, we'll show you a couple of techniques. The 9 EMA plus the fractal reversal. And so we've put the fractal reversal in. So here's a fractal bottoms. And breaking the bottom of this fractal is known as a fractal reversal. So what we can do now, we've got nearly 2% in the bag. We can walk this up under the latest fractal. So 26 pips there. Let's make that. One thing I gotta be careful for with, there we go, 26 pips there, so 27 pips there. So we're in a position now where if we get it wrong, we'll make 1.58%. If we get it right, we'll make 2.1. So we can't lose. And what we're going to do is we're going to wait for we're either going to wait for either our profit target being hit, which is 81.82, or we're going to wait for a body of the candle to close under the 9 EMA. And as you can see, right from 9.36 here, it never closed above the 9 EMA once. So the market's been very positive. Again, if you wanted to fractal trade this, we choose not to, but I'll show you the fractal breaks in a minute. So we're either going to break the 9 EMA and get out, and we'll get out for 1.58, or we're going to hold on for 81.2. And that will give us 2.1. So we're either waiting for a break under here. We will get a reversal of the close. And you can see on this bottom one. So we're all collectively, we're up 2.58% this morning. But yeah, that's the fat lady's not sang, so we don't know really what we're going to end up with. What we do expect is, so if you don't have pivots, that means nothing to you. It's open white space. Have pivots, it means a lot to you now, and now you've got targets, you've now got movements in the market, and we have front runs of the targets. So here you are. This is an ideal note that people are actually taking profit. They are front running. So what we're looking for here, we're looking for either being stopped out to 1.58. That's it, and we've just been stopped out for 1.58% because we had a fractal reversal or a close under the 9 EMA. You can see the on-balance volume, OBV9, is starting to come down. We generally don't use OBV for exits. We use them for entries, but you can use them for exits. But if you can use them for exits and the time frame you want to be looking at them, this is set to 5 minutes, wants to be twice as short as you're trading. So if you're trading on 10 minutes, you want a 5 minute OBV. So you can see here how the market front run the close. Normally, they are front run the close. The gap can be, you've got 1 pip spread here plus 1 to stay safe. the gap can be considered as closed if it comes within 3 pips of that market. They are 1.7. So with the spread, etc., depending what broker you've got, it came to 0.7 within the target. But you've got to be absolutely disciplined in what you do. So market at the moment, you can see never closed under the 9 EMA. This is going to. So what we've got now is a bit of a pullback. We're not really bothered on this one. This is a swing trade. We are expecting this as a wave, in first impulsive wave 1. So gap considered closed. The only thing we've got in the way now is the BRN. Other things that we're looking at now, for the guys, we had some 81.30 call options. We bought for 20. They are 47 now. So those calls are up 188%, and the 81.40s are up 168%. So we've got 168% on the 81.40 calls and 81.30 calls, 188%. So very nice indeed. So this, to go back, this is initial phase. Wave 1, impulsive wave 1. You can see is a fractal break here. That fractal break on a 5-minute fracker was a nice easy 1-to-1, as you can see. We didn't choose to do that. All thought we'd use all different types of technique to close this gap, and we didn't choose to do that. So wave 1 and wave 2. Wave 1 and so on and so forth. We do expect this market to go a lot higher, but the idea of a day trader, technically get in, have a strategy that actually works, be absolutely disciplined and consistent how you do it, be patient for the setup, and then nail it. And that's what it's all about as a day trader. There's no wishy-washy EMAs crossing that. They're just, if you've seen the videos with the simple moving average and MACD crossovers, they just don't work. You can make them work on a video. These don't work. Please, if you'd use them, please throw them in the bin, because those techniques will lose you money. They just don't work. Take it from me, using them you've been trading in the market now for over 24 years. They don't work, so don't use them. Use techniques that do work. You know what the markets do. Markets break up and move up, or they break down. So why wouldn't you use a technique that looks at market breakouts, market continuations from pullbacks? That's the way markets move. They're moving impulsive waves. And I guess there's quite a few people might use simple moving averages, and they'll wait 3 or 4 hours for a trade, or use a daily chart and a 4-hour chart and spend half the life waiting to get 1 or 2%. Our aspiration here, well, yesterday we made 8%. I think the day before, or we broke even the day before that, I think it was 4%. We're looking at, in my trading room, getting everyone to be able to trade consistently about 2% a week. Compounded to 160% return a year. Unheard of, I know, but we do that in this room. We prove it day in, day out. All these trades are always recorded. We've been doing this for 5 years now, and every single day is recorded. All the wins, all the losses are all recorded. So we can't make any claims that we can't make any actual claims that we can't underwrite. Right. That brings me to that point here. Yeah. So we do the day trade and set up. This will be one ready for tomorrow. And our stats, I put them in. They're in Slack all the time, recorded. But here we are. Let's make this a bit bigger. Let's make this a bit bigger so people can actually see. I'll do. So 8.3 the last trading day, then 2%, then 3.5%, then 2. These are all daily results. 4.4. We lost 0.05%. We don't win. We do not win every day. That's absolute given, as people know in my trading room. But we've never lost a week in 5 years, so that's not so bad. 4.676, 5%, 5%, 8%, 6. Just keep scrolling down, find some red that we lost. There we are, lost 1.25, won 1, lost 2. We had a power cut, something went wrong. 5%, 4%, 3%. I won't keep going on. It goes on and on and on and on and on the list. Every single day recorded every single trade that we did. I'll just get rid of that. I don't want to see that. Let's get on with the trades. So we've got to pull back. So David B, is learning to trade the fractals on the 9 EMA a good practice to start? It's a brilliant practice to start and a really good way to make a living. Once you've conquered the frackers, once you've done the frack, there's no looking back. Once you've done that, you will smile at why the heck were you doing all this other stuff before. It is. So Paul, here's a swing trader, Paul Trader. I expecting correction with the FTSE over the coming months, sub 8,000. Well, if the crystal ball would be able to answer that, and I'm not being facetious, as a day trader, we don't give a stuff. We trade what we see. Big round numbers are very important. 7,000 is a very important number, 8,000, 9,000, and all the numbers that are rounded before that. But equally important, and I would say more important for a day trader, is the BRNs. So I got BRN, big round number, 8,200. Markets will bounce off BRNs and be attracted to BRNs as well. Doing a forecast of what's going to happen at 8,000 absolutely is of no use to a trader whatsoever, especially when you are over a 5-day ATR away from 8,000 market, miles and miles away. It's probably something that's not on your radar. As a swing trader that looks at things month by month, it might be of interest to you, and you might have to wait next year to see 8,000. But markets consolidate around big round numbers. That's one thing you just need to know. There's a lot of big traders use BRN trading, big round number trading. They will trade closing gaps, they will trade daily pivots, they will trade classic S3 trades. That's when the market goes completely out of balance, or R3 trades. And then the intraday bounces that you get, C-Ball, C-Boss, absolute bread and butter trades every single day. We trade those every single day. There is a potential to have 5 cam trades a week, 5 wall trades a week, 5 closing gaps a week. There are a whole plethora of opportunities in the market all the time. What you've got to have is a strategy to manage those. You have the discipline to wait to implement your strategy, and you've got to be absolutely consistent. It's no good being a butterfly across YouTube trying to learn all sorts of stuff. You need 1 or 2 strategies, that's all, and probably about 3 or 4 assets. You can have an indice on the UK Northern European markets, in indice in the North American markets, maybe a commodity. Chuck an FX in there if you want. Get to know them, learn the personality, and just consistently apply. I keep saying I'm going to do this, but there's a 5-point strategy, the 5-point way of doing things, and that's kind of rolled out onto a big document, and it's all free on my website. If you go, can I type this in? I've got the website. Let's get my website in. They're free. So if you are wanting to, under free resources, call it useful stuff, I think. Yeah, importance of emotional intelligence. There's some really good information there. I'll just copy that. Can I put it in the room? Let's have a look. Is this technology gonna work? Yeah, there it is. So if you go to that link, there's a whole host of free stuff on there about risk management, emotional intelligence, why people lose, and by all means, you're welcome. just take them, use them. But I'm going to do a video on the five points before we go on to other trades. First thing is you need a strategy, and a strategy you believe in. Because if you don't believe in anything, you're not going to consistently apply it. So you've got to have a strategy. You've got to learn it, ring it inside out, upside down. Use a fractal, use a 15-minute bar, use a walk in the dog, use a system trade. Get your strategy in play, then have the discipline to only use your strategy and have the discipline to wait for it. So one of the strategies here would be a fractal breakout here, of course, 5-minute fracker going on. Be consistent in the way you apply it. So have a strategy, have the discipline, be consistent, and be patient for it to be patient in your trading. Let the trade come to you, because you always will. Don't follow a trade, don't chase a trade, wait for the trade to come to you, and get up every morning with passion. You know, have the passion to trade, have the wherewithal not to hesitate, not to dance around your handbag. Press that button. If you've got the strategy and you've got the discipline to apply the strategy, you can be consistent in the way you apply it, have the patience to do it, wait for it to come to you, then smash that button. And if you've got a strategy that works, let's say 70% plus of the time on a one-to-one risk reward, you've just turned yourself into an ATM. Well, why wouldn't you want to do that? Traders don't, but why wouldn't you want to? Trading, having a strategy, finding a strategy you can backtest, having a strategy that works is reasonably straightforward. The difficult thing is you keeping track of your emotions and your emotional intelligence to be able to apply the trade. That is absolutely key. That's why most traders fail. Let the emotions get on top of them. You've got to be a cold trading machine. You've got to internalize your strategy, believe in it, wait for it, smash that button. And you know, once you've done that, there's ways of managing the risk like you've just seen. But I can't emphasize it enough. You've got to be consistent. You've got to believe in what you're doing, and you don't need to go scraping the markets for every single thing to trade. You only need to trade once or twice a day. Sometimes, you know, as a swing trader, you'll probably be horrified with that. Sometimes we'll always do 1 or 2 trades minimum a day. Sometimes we'll do 10. And yesterday we got 8% out of that. So anyway, right. So we've got a phase wave coming in here on a pullback. So what I'm going to quickly do, I'm going to go to the DAX and have a look, see if we've got a setup yet. So here my buy zone on the DAX starts at 14,441 and disappears around the 1414 area. I am going to put an alert down here on the DAX. We've broken through CBOS. The only way you would trade a long through CBOS is off a key critical area. So we've got a key buy zone here, and that'd be interesting for me to buy. Otherwise, you would want a break up of CBOS, and you'd want a 15-minute bar. The gap has not yet been closed, so we've got a hole in the market here to be closed, and that will get closed today. You know, this is on the record. That will get closed today. So, you know. Oh, what have I done? It's looking at the side of my face. What have I done here? Share that screen. I don't know how long I've been talking. Like that. Right, okay. We're back on again. So, right, I don't know how many minutes I've been talking like that. So, sorry about that. So, here's a buy zone. I should just keep checking on my second screen when I... yeah, so here we are. Here's the DAX. Buy zones looking at 14,441 down to 14,414. Camarilla breakout short is here, so we don't want to be trading a Camarilla breakout short. What we do want on the DAX is a 15-minute bar above the cam level. So there's a 15-minute. So here we are. There is a 15-minute bar. So we're late to the party on this 15-minute bar. Now, a few things that we could use. We could use a 15-minute bar, which would be a break out of here. If we'd done that this morning, if I'd done that while we were live streaming, I'm getting paranoid now. I'm looking at the other screens, make sure we're still going. And your swing, the stop would be under that swing low. So there's a 1-to-1 15-minute bar going through there. However, the market has pulled back. So there's two things we could decide to do here. We do need, when we're going to go long, we do need to be above the 15-minute bar, absolute certainty. So we also, because we've seen the impulsive move come up above CBOS, what we can do is we can go into a 5-minute chart and have a look at see the 5-minute fractal structure. So I'll just put that marker in for the 15-minute bar. That's a 15-minute bar there, and there is the stop for the 15-minute bar. Just want to show you, go through this in detail so you get an understanding of what we're doing. So there's a 15-minute bar strategy. What we can do is also look at this structure, and as you can see, the structure, the fractals, we've got, oh, excuse me a minute, that's my alerts going off. Where's my alerts? Bear with me 1 minute. You might not be able to hear them because I've got voice calming software on this, but I've got the footsie trigger in telling me you should be looking at this, but let's have a look at this. We've got a fractal structure like a staircase. That is your perfect fractal structure with the reciprocal staircase coming up. So we've got the markets actually at the moment, higher highs and higher lows. Absolutely, definitely, that's what we want. There's the OB, that's the old OBV. So I'm just going to put the new OBV indicator, but it's just the same. Let's just add an indicator on here, and let's have a look. These are all my indicators. Let's put OBV9. There we are. Put the OBV9 on. There we are. So we've got that indicator now. We're still negative on the 5 minutes. We've not got the unbalance. The floor unbalance is not up. You can see the rainbow blocks are red. The market is reciprocating, coming down. So this would have been a reasonable fractal to take. It's a 5-minute fracker there, and your stop would have had to be in there. That would be in play at the moment, and you'd be taking heat. The next fractal, if we hadn't already got in, there's another fractal to take. Now, if I put that into context with the 15-minute bar, there's a 15-minute target and a 15-minute stop. So you still could use a 15-minute bar. You could have entered on the 15-minute bar, which was, and you still can, nothing's stopping you to do that. If you're wanting to do a 15-minute bar trade, then your entry would be 18,527 and stop under the swing low. Because the 15-minute bar has been activated, then that's quite nice. However, a watch out, two things really. We're looking at the 15 minutes here. We're getting a candle closing under that 9 EMA. So what you don't want to be doing now is to be smashing a buy bar when the structure at the moment is coming down. If you took the 15-minute bar, then you're in the 15-minute bar with its integral stop anyway. So you're not really taking much heat at all there. But I think what we'll do on here, we'll take a fractal trade. And at the moment, with the unbalanced volumes, saying, well, the OBV chart is saying, don't do it yet. So we won't. So here we are. There's the frackers. One thing of interest, one thing that you need to note is when you're taking a fractal trade. So and again, I don't know who's actually on. I can't see all the names. Is if you haven't got a fractal tool, they're on the website as well for Pro Real Time and for Trading View. We don't have them for MT systems. We don't use MT systems. I only use MT systems really for prop trading, and just run the prop accounts on the MT systems. But yeah, so you can get your fractals on the website as well. So just a reminders: fractal breakout long, fractal breakout short. This fractal is still relevant so long as this bottom fractal has not broken. And when you put a stop on a fractal, you need the stop to be the spread 1.7. What is at the moment? 1.4 at the moment, 1.4 plus 1 pip. And what that will do is having the spread difference under that plus 1 will allow for a double tap on the bottom of the fractal, and you still not get taken out because you've used the spread plus 1 pip. So that's 2.4. So if you were actually going to put a trade on here, you'd want your stop would be 2.4, like so, under the market. You can round it up, round it down if you want. That would be the stop. And what we'll actually do, I think, to close this gap, and the gap will get closed, is we will take a fractal break out here. That's we use about half the distance for a fractal break. That's 18,533.7. We can we'll round that up to 18,535. There, there's a break. And we'll have our stop down to here. That still comes very much short of the close. But the interesting thing here is just put a bit of soft resistance in here. You can see the market has had a little hesitation around this area before. So to get our 1-to-1, we don't have to go all the way to the close. We only have to go to the daily low to get a 1-to-1, but we do want to close this gap. So what we'll give me ruler, what we're looking for here, I'm just roughly, so that's 43.43 pips. So let's clean this off, and we want 43 pips. 43 pips as the stop. Just we can put forward, we'll adjust this in a minute, 43 for the target. That's the 1-to-1. And we'll put a buy stop in here at 35. There we are. That's 35.1 down to 35. Boom. What I'm going to do now is I'm going to put an alert into the front run of the daily low, just to give me a heads up when that starts alerting. And I'm going to then extend this into a front run of the close. So the close is 608. So I'm going to say 605 for a front run, and we're going to look for a 43 pip stop, 70 pip target, very similar as the I'm getting loads of messages from the Slack room. If you are on here, please don't send messages in the Slack room while we're live streaming here. I can't answer them because we're live streaming. 1.62%, that's what we're going for on the DAX. So that's the trade. I'll just repeat that. Can I actually, will that allow me? I'm not sure whether I could, can you actually add an attachment on these posts? I'm not sure whether you can. Let's have a little look, see if we can do that. No, you can't on the live stream, no. Never mind. But if you take a screenshot of this and this is of interest, then you would, this is what you would want to trade. I'm also going to put an alert down on this fractal down here. So if we get a breakdown of this, we will then need to have a look at some new structure and a new breakout, unless you are using the 15-minute bar, and then you know where you are with the 15-minute bar anyway, and your stops all the way down here anyway. Okay, let's go and have a quick look at gold. What time have we got? because if you allow me, I'll just trade all day. 50, right. So this is gold. Oops, right, I can see what's happened now. Every time I change the window, I'll have the entire screen. There we are. That's better. I've been sharing a window, flipping heck. I'll get used to these live streams in a minute. So what we did on gold this morning, we had as Jerome always guarantees you don't send a message in the wrong time. Right. So here was the gold trade. Where is the gold trade? Gold crit. So this is a gold trade this morning. So here we are. There's the entry 235.32 with a 5 pip stop. So that was the trade this morning. That we 5 pip stop, and we're going for. We're already up 2%. So that's very nice. And I mentioned on that, watch out as breaking out this channel. I do believe that will happen, but we're going for 11.5 pips, so kind of going for 1.15%, and we're looking at to smack up into the top end of this target, and my target is 2.444. My larger targets, as people know in the room, is 25.72, and I have a target of 3,000 for Christmas. And we've hit every single target so far. These are all based on Fibonacci retracements, Fibonacci extensions. I suppose I could put a community post out if anyone wants me to do videos on how to use Fibos for retraces, how to use Fibos for forecasts, how to do Fibo extensions. I'm quite happy to do that. Quite happy to do anything that helps people. You can see here we've got the OBV9 telling you it's a screaming long trade. You can see the ATR, average true range, is coming down. So what you'll see here is the candles will start getting smaller. There, can you see? The candles are starting getting smaller. The average true range that's moving in the market is getting smaller and smaller. So what we can do here, we can. I want to run around on the different things. We've got a much bigger trade on here. So do we just take 2% or hit that full target? You know what? We're going to take, for the people in the room, please take 2%. I'm going to close, tell the people in my room that are not on live, gold. I just want to make sure that I tell them first before I do it. Gold taking 2% profit now. So just put that in the room, let people know that we're going to take some rupees out of the market. I just want to make sure that we're telling everybody. What I think I'll do, I'll put the stop to entry, stop to 2%. We'll go back into this 1 minute scenario here. You can see how the market is shallowing. You can tell that as well because we've got the ATR running down. So what we're going to do, we're going to run this all the way to, can we run this all the way to 10? I'm going to watch out. This is IG, which are a bit naughty sometimes with the way they play the game. They're a market maker as well, so they move stops all over the place. So let's just take that. Now they're playing around with me. They won't let me move my stop, which is poor behavior by IG. But you would come to expect that. Right. So we've just made 2% on gold as well. So far today with the FTSE, we're up 3.58%. Not a bad day so far. I'm not including, we're already up at 1 point. That was a 6 pip stop. So we're up 3.1% on here also. I think I'm going to move this up 6 pip, move this up 12 pips and lock in another 2% here. And then we'll see where we go. We'll see where we go there. Right, so that's gold. Let's see what these alerts are doing. Every time I switch my alerts on, triggered, Germany. Right, so let's go and have a look at Germany. What I mean by triggered, it's told me the market's come down. So let's get into the detail. So our entry needs to be revised now for the DAX. So you can see it, structure has been broken. So as soon as structure's been broken, it makes that trade null and void. Now what we've got to wait for is some new structure to be put in play, and that's going to go beyond our live trading room, unfortunately. I could sit here all morning and trade, but people will get sick of it really. Right, so what I would recommend here, just going to draw this in purple. This is a Camarella breakout short area. You do need a signal above this level to head up into that close. You do need one. So you can either do a 15-minute bar, and there is a 15-minute bar already that's been activated if you've been trading it. And just a reminder where that 15-minute bar is, breaking above the 9 EMA. So that's your 15-minute bar, and there's your stop. That's activated already and it's in play. If you traded that, you know we haven't. You can wait for the market to pull back to provide another 15-minute bar to actually trade that. And don't forget, the 15-minute bar needs to be above Camarella breakout short, or don't take it. The caveat to that is if the market, let's get a bigger tick, if the market comes down into the buy zone, then you can do a 5-minute fractal because you've come off a key exhaustive area, and that would be absolutely fine. I teach this all the time in my trading room. I'm hoping just give you a flavour of how we approach the markets, how we look at them, how we review them, and how we manage them. So we've give the FTSE a bit of a pummeling for 1.58. We've extracted 2% out of gold. Really don't need to do any more, really. 3.58% is not bad. We're already locked in 2% on gold also as well. So if we shut up for the shop for the day, we'd be 5.5% up today, but we haven't. Whatever, David B. Yeah, please send email me. No problem. I'll tell you what. I'll put my support. What I forgot the email. I'll tell you, I'll put my email in. I don't know what the support one is. HARKO.com. No problem with the emailing me directly. There you go. That's my email. Okay, so this will close. Mark my words, guys. It will close. We just need to be disciplined and patient. We will get this money in the market. It will happen. We're just gonna be very careful on how we do it. Now, one thing, another little tip. We're kind of coming up to about an hour-ish now, and people sometimes only put an hour in for the learning or these streams. I'll just put an alert down here. If we get an alert, I'll start getting interested if the market comes down here, and I'll be interested if the market starts coming back up here. There is an opportunity, of course. We don't want to do this on the DAX. We could start the walking the dog, as you can see, walking the dog here. If you are going to do walking the dog trade, we'll have to give it a better name than that. Is you do need to have your stops under here, and that's not. You need a 100 pip stop at the moment, which is not really feasible. 30% ATR stop would probably be fine. And where's my? Have I deleted my? I think. Have I deleted my pivots. I don't know why I deleted them. My pivot chart. Here we are. Ah, that's a fracas. Ah, right. I'll actually cover that a little bit in a minute. Right. So the average true range on the DAX, 60 pips. So if you were going to do a walk in the dog trade, you would want to set your stop for 60 pips, which is a 30% average true range. So you'd set it for 60, and you'd walk the dog like so. Walk the dog down here, walk the dog down here. It isn't something that I would recommend on the DAX. It's more of a footsie trade, but you can see this market starting to move up. A tip, if you like to trade the FTSE is inherently connected to the on the indices into oil. So if crude comes down, you'll see the FTSE coming down, and if crude goes up, you'll see the FTSE going up. It is more than a tenuous link. Now, what we've got here on crude day trading view, look at this, the market's stopped. Now, if you're an options trader, a call option to the end of the week for 82.50 would be a beautiful call option, and it would be very cheap at the moment if you can get that call. Let's have a look, see what call options that we can get on the IG platform. I'll just put them on so you can see exactly what I'm doing. Call options, commodities, weekly, oil, crude, expires the 17th. That's absolutely fine. And let's see what an 82.50 might be. Oh, that is absolutely, according to IG, there is not a hope in hell of that happening. So two ways we can do, we use call options. We use call options to target the market. And let's have a quick measure on how long it took for the last time. It took less than 2 days to get back up to 25.50. Call options, you don't need them to come all the way. We trade call options all the time. Yesterday we made an absolute killing out of call options, and here it's saying there's absolutely no chance of that happening. And do you know what? I think we could be a bit smart here. I'm not sure how many people are in the room that are in my room. I'm going to have to paste this into my room as well for the guys, because this is I'm just going to run a Fibbo on this. 81.76 is an 81.70. Oh yes. So right, we're going to do a call option, guys. The people in the room, a call option, and we are going to whack that now. 8100. The people in the room who don't believe what we do, make a note of exactly what we're trading. Then you can actually, I might put a comment in the video on this oil, on crude. We look, so two ways of doing a call. We can do these calls in a split way. We're going to go for this call that's getting more expensive as I talk here. Call option there. What I'm going to do, bear with me 1 minute, guys. I don't want my traders to miss out. Oil, we're doing a call on that. Put that in. Crude, let me type this in. Crude call as ID'd. And the other call option we can do, what we're saying is we're going to, by Friday, this market is going to be approaching or be above 81.76. We only need to move a few, and we only need to move that distance to make money. And putting the calls in is a really good way of getting long in the market without it. What we're seeing, what we hear, what we spotted here is we're in a 4-hour resistance. If the market comes from that, well, it only needs to bounce a little bit to make quite a bit of money. The other thing we can say is, well, we believe that the market is going to by the end of the week be higher than maybe 8,000 or 8,040, something like that. Let's have a look at that. And you can see the way these things are being priced. Absolutely, the market is going to be nowhere near 8,000. The brokers pricing these calls expensive because they think the market is definitely going to go up. We know the market's definitely going to go up at the moment. The brokers aren't really sure what's going to happen. No one knows because no one knows what's happening in the world. No one knew that Trump was going to be a target. No one knew. So what I will do, no, that's a good call. That's pardon the pun, that's a good call for 8100. So we'll do that call option. What we can do as well, you can see on balance volume is starting to really run on a rip, and that actually our OBV indicator, which you can get as well on the website, of course, is highlighting the trade. When did it highlight that? Highlighted that at 9:20. Where's 9:20 on here? There at 9:20, volume started to come through. So it already told us that the market volume is already coming through. So let's move out one more time. We're looking at the 4 hour. We're overcooked, completely oversold on the stock. The market is just trading under the 200 EMA, but we're under the 9. So we've got to markets to reverse at some point, and there is a risk element to spotting a reversal. Now, the way to get a confirmation of a reversal of this key area, you could walk the dog, of course, but we don't want to. We've got a call option. We can be quite cool about what we do here. And what I would do of this key area now is I would take a 15-minute bar. And look at that 15-minute bar. There, 15-minute bar. Perfect storm. It's also going to be a fractal. So that 15-minute bar is at 45.4, rounding up to 46, spreads 3. So we want to be for 48 entry. And we want to be under the swing low, which is, that's 22.8. We're round that to 23, plus 3, 26, plus 1, 27 pips. This is right. When you know what the way you trade, you got to dance around your handbag, spot the opportunity, have your strategy, have your discipline, be consistent in the way you apply it. There we are. There's a one-to-one risk reward. Is that possible from the last plunge down? I would say so. Where are the resistance points? So if we get an impulsive move back up, we expect a 23.6% retrace. Our one-to-one is well within that. I would like to see a 61% retrace. The issue that I can see straight away in the way this market's come down is we do have a bit of soft resistance. I'll mark that in by blue into here and here. You can see here the market's got a bit of a soft resistance into here, and we have some harder resistance which I'll mark in red on the 1 hour into here. So really, if we're going for a one-to-one risk reward, there's 27, not a problem. Markets usually give you a 50% bounce, but it's not an absolute given every time, but it's more likely than not after it's hit 4 hour resistance. So what we're going to do here, we're going to move our target up, and let's say we're going to go for a 2-to-1 on this. So we want no, let's go for a 3-to-1. So 327s are 81. So let's just go an 81 target on this, and let's see how we do. What we're going to do is we're going to put an alert down into the 1% level, which is here. So we're waiting for a 15-minute bar reversal. Market has gone negative here on the 10-minute, but we are using the 15-minute bar break. So what we need to do is go back into the 15 minutes. We know that that break here is a valid break. We closed above the 9 EMA, so that is valid. So what I'm going to do, so some of the traders are on trains and things and traveling today and out, so I'm just going to, bear with me, I'm going to copy that set up so the guys in the trading room do not miss out. So crude idea 15 min bar. Right, so this gives you an idea of what we do when we're not everyone's live. So shows the setup, shows it's a 15-minute bar quite clearly. People know it's a 15-minute bar because I've told them it's a 15-minute bar, and there we go. They can get stuck into that. So what else? What else? This morning we were looking at USD crude. So let's have a quick look at that. What we were doing with USD crude. We've traded this that's USD Swiss. We've had 2 trades out of that. 1, 2, 2 out of 2 on that one. USD Japani was the one, and there's the OBV. So absolutely screaming short. Here we are. So the short is progressing. Short is progressing, and I think let's just look at the history. History. Yeah, the USD Penny bot has been on as well. We have a lot of bots. I'm going to do videos on this as well. We run lots of bot tools that help us. So we've got 5 bots running at the moment and 24 on the sidelines. USD Japan is waiting to enter, and that already has entered. So we've got some AI code into here, some code that does a stop to break even function. So if we get it wrong, we lose with +2 pips, and if we get it right, we make 45, and we make over 1-to-1 risk reward. So I did that this morning in here also. There's our bot room. So this is where we are so far with the bots. This is just one of the bots, one type of bot. These are fracker bots using fracker technologies, and this is where we are at the moment. So these are the tools that work for us while we're trading. So far we're up 2% there, and we're looking at running these month by month, and to show you where's the report? Yeah, there's the report for the month. So for the month of June, only switching them on and off when it's appropriate. We had a holiday in there as well. We made 7,251 pips if you're in MT language. If you're in spread bet language, 725 pips, 15%. We have a hit rate of 77%, and the rolled up trades, the FTSE won 85% of the time. DAX 100%, Euro USD 100% win rate, AX 100%, 80, 60, 100, 100, 100, 100. And then you can see it 60%, even when it doesn't work very good, you can see the losses for the month, 0.2. That is the risk management function working. So we're in for roughly between 10 and 15% a month, every single month, using the bots. And those just go in the background while we're trading. And if we can get 150, 200% a year return on that, then that would be great. So this is USD Japani. There's no reason to do anything with this at the moment. We are just over 0.5% up on that, and we're going to let that run down a little bit further and see where we get with that. Let's see if we can get into this FTSE. The FTSE should be buggering about, yes it is, a little bit, because crude is. Now, we've got to wait for this setup. We don't have to trade this. We're already in the money already here. We're very close to the gap. And I do think we're going to see Camarilla breakout long in the next couple of days. Hopefully today. If we get a bit of a help with the Northern American market this afternoon, that will be good. If crude gets a wiggle on, that certainly will help. We've got a nip in at the moment, a nipping in on this fracker at the moment. Look at this. Very similar to a Bollinger Band. That's indicating that the market doesn't know which direction to go. So we look at the Renko blocks. Renko blocks are saying down at the moment. The 26 is saying up, and the on-balance volume is slightly green. So if we get down into the lower levels, we'll see something slightly different. Actually, it's not manifesting itself just yet. There is a 5-minute fracker here, which would be good because it's trading above the 9 EMA, trading above the 200 EMA. If this breaks the bottom of the fractal, then all bets are off. With that fractal break, we'll need a new one. And you can just see OBV is telling you not to trade, so you don't. Discipline, don't trade. Right. What time is it? Oh gosh, is there anyone left watching? Right. So we've done gold. We're looking at crude. We're looking at the DAX. We're looking for another entry on the FTSE, and we're potentially we're locked in. We're locked in money on gold, another 2%. We're up 0.5% on here. We're looking for another 3% on crude, and another day's live trading. So I'm going to run off now, and let's have a. Can I run off now? Put this screen up. Yeah, run off now, and we've done a little bit of trading, and that is roughly what we do every single day when we trade live. We trade in the morning, trade in the afternoon as well, an American session. And I hope you found that useful, and happy trading. Hopefully you can put some of these things you're watching here into practice. Don't forget, have a reread of this. Put all your comments in the in after this it's finished. If you've got any questions, stick them in. Very, very happy to answer any of your questions. And what I will do, I'm reluctant to use talk about bots too much, because there's so much crap on YouTube about bots, about how good they are and how they're not. They're a very dangerous weapon in the wrong hands. We use Hikinashi coded bots that we do know that actually work, but we also have a filter that tells you when to put the bots on as well. So we have lots and lots of. We have a bot that tells you when to put the bot on, and then you manage them. But in the background, I think last year August was our best month. Made 22% in 1 month doing the bots. And the reason I'm a little bit reluctant to do it on YouTube is people won't believe you. But we've got it all recorded. It works. It's just, that's the way it is. If you do like the channel, please give us some support with a thumbs up and some nice comments. That would be great. And I'm thinking of doing a stream on a Friday as well, if people are interested. I put a little poll on the community tab on YouTube, and I don't think anyone's looked at it. So if we can get some support, if people want to come and listen to me jibber jabber on and trade live on a Friday sometimes, then quite happy to do that as well. But happy trading, guys, and see you next week. Cheers then. Bye bye.